introduce Dave.
Great. I will go ahead and kick us off. So good morning. Thank you, Michael and Kyle, for jumping on here. We would love to introduce to you Dave Lewis. So those of you who are not familiar, Dave is the founder and CEO of Ranqx. And Ranqx is a fintech that I was able to see and meet out at Venture Tech, I believe 2 years ago. So Dave's solution is one that is, I think, very relevant to our industry and where it's headed. And in my opinion and our collective opinion, has already had and can certainly have a very big impact on the commercial lending world for our credit union. So what we would love to do is give Dave an opportunity to share his product and solution with you, but generally speaking, just kind of talk about the industry, what some of the trends are that you're seeing, and essentially open up a dialogue a little bit here to see what we can maybe look to do with some next steps. At the CCUA, we're always looking for ways that we can bring this information to our credit unions, but we're also looking for ways to potentially partner with some fintechs in a way that can really help our credit unions by leveraging some of these new products and services. So without further ado, Dave, I will pass this off to you. Thanks for being here.
Well, thank you. Really appreciate it, Melissa, and just to Bryce and Dean and David and the co-op team. It's just been wonderful being hosted here. It's a bit surreal for me. I'm a Kiwi, as Michael and Kyle, you can pick up the weird accent, and it's surreal because I'm sitting here on Atlantic Ave in Boston watching the snowfall. So this is very unique. I was in Rhode Island with the team yesterday, and I think it's just as well that we did book this to be a Zoom call because there's some pretty heavy snow right now. So back home in New Zealand right at the moment, it's about, in my hometown, it's around about 82, 84 degrees today. So this is neat. The kids will be loving this. So appreciate your time. Yeah, to Melissa's point, probably quite keen to sort of talk about the problem set that we've seen in the market and the opportunity for the credit unions. I am going to give you a demo of the customer experience of the platform and talk about the types of data that we use in our automated underwriting process. And I'll try and keep that sort of as quick as I can, so that, as Melissa says, we can have a bit of dialogue as opposed to me just being a talking voice. Having said that, the slideshow that I'm about to take you through and the demo, Melissa does have a copy of, so we're happy to share that with you post this session as well. And yeah, we're planning on working with CCUA in the months and sort of years ahead to really build out this opportunity for what we believe is an unmet need for community, community prosperity. So I think this is a space that credit unions aren't doing well. With all due respect to yourselves, I haven't had the time to look at your respective credit unions and see what your small business solution or value proposition is or isn't. So you may well be on this journey. I'm not sure. But at least we can start the dialogue around what we see as the problem set and what Ranqx is doing to address that. So I'll grab the screen and sort of jump into sharing with you a bit of where we've come from and what it is that we've got. Just checking, Dean and team, can we see that? I think we might be able to. Yeah, cool.
Yes.
I'll minimize us because we know what we look like. Fantastic. So look, fundamentally, the Ranqx platform has been built out to accelerate small business lending, and our point of difference from other small business LOSs or commercial LOSs is how we leverage real-time financial data. And I'll talk about the types of data sets that we are building out, and there will be more to come. I always start my session by showing this loan document, and this journey's been very personal for me and my family. This is a loan document that my parents took out for a working capital loan when I was only a few years old. So it's in the 1970s, so I'm aging myself here. My father was employed somewhere and he wanted to start his own small business. The bank said no, and he ended up getting $1,000 New Zealand dollars, mind, but this is in the 70s, loan to buy his first lot of equipment and set up his first factory. And I show this for two reasons. Firstly, you can see it's a very analog process. It's handwritten out. He met with people, they shook hands, the documents were exchanged. It was a very manual process. And here we are 50-something years later, and we're still largely lending in this way, which means it's not scalable. There's a lot of friction for the applicant, and it's it's really highly inefficient for the lender, especially at those kind of volumes. The second reason I show this is that 50 odd years ago, when that loan was granted, it was a small business of my dad and one employee and mum managing the books. And now, 50 years later, that business turns over tens of millions of dollars. It's employed hundreds of staff through the years. And my family of 19 and the various employees' families have hugely benefited from the salaries and the income and the profitability that a small business creates in a community. Mum and dad now have my family trust now have an extensive commercial property portfolio in and around the Southland region. It's been a highly profitable business. So, working capital is the lifeblood of small business, of communities that we live in, and small businesses probably right now are having more challenges in accessing working capital than ever. So, if I think about what is at the heart of what credit union lending is and community prosperity, and think about your commercial loan books today, which will be, I'm guessing, highly skewed towards commercial realty, we can see the linkage, just even my own personal example, between having access to working capital and what that can lead to in terms of financial prosperity and commercial real estate opportunities. So it's personal. We're a family of small businesses, and I'm very passionate about how we can accelerate the flow of capital to more of them. In terms of our business, we're a New Zealand fintech. As I was joking with the team yesterday, you don't start and build out a fintech in New Zealand to scale it in New Zealand. We're a very small nation at the other end of the world, but we are very innovative, particularly around our banking technologies. We actually started out in 2015 building real-time financial data integrations from the likes of QuickBooks and other accounting ERP systems so that we could look at real-time P&L and balance sheet. And it happened that a number of banks around the world were very interested in the data that we had. And we spent a lot of time traveling and meeting with these banks to try and understand how we could commercialize that. We realized around 2018-19 we were selling a vitamin and not a painkiller. Hard to commercialize insights. It's great when insights are bundled into something else, but basically we pivoted into using that small business permissioned API integrated data engine into a user interface with a automated underwriting engine in it, so that we could basically, in really fast time, understand who's applying for a loan at a financial institution and how likely are they going to be able to repay it. And New Zealand's 5th largest financial institution backed us to build that. That's called Kiwi Bank. They're around about a $30 billion assets financial institution, state-owned. And in 2020, fantastic year in many ways in terms of poignant memories and frustrations for all of us. They launched Kiwi Bank Fast Capital. So that product has been live since 2020, mid-2020. It's an interesting time, as I say, to launch a small business lending platform. But they've just renewed for another 3 years. So they've grown that from doing 1 or 2 applications a week to nearing 100. And basically the value proposition of Kiwi Bank Fast Capital is that a small business can apply for a working capital, a line of credit, overdraft, term loans, Visa business credit card within 3 or 4 minutes, and it's auto decisioned within 2 or 3 minutes after that. So we're removing the friction for the applicant and making those sort of loan sizes of typically sort of between $20,000 and $70,000 highly more efficient for that financial institution. We had a fantastic chairman lead us in our early years, Sir Ralph Norris, who was the CEO at Commonwealth Bank of Australia, the 10th largest bank. He's still a significant shareholder of Ranqx. But with our US focus, we appointed John Horner in late last year, and he's the ex-chief investment officer and treasurer at JP Morgan Chase. So he's a retired Wall Street banker who's passionate about how fintech can shape the future of financial institutions within the US. And Melissa touched on the traction we've had. We only entered the US market in late 2022 when my Prime Minister let me back out of the country after the pandemic. and we found ourselves at Venture Tech, where we won day one, and we're close runner up in the Venture Tech showcase. So since that time, we've had partnerships build with the likes of Visa, where we've got a North American distribution partnership. Visa is very interested in our technology because a number of their issuers are often saying to them, small business credit underwriting is hard. How can you help us solve that? And so obviously it's a great channel for us. QCash Financial, you'll see there. Don't know if either of your credit unions are QCash customers, but when we came off the stage at Venture Tech, the CEO at QCash grabbed me by the collar and said, "You're going to be the QCash of small business lending." So if you're familiar with that product, you'll probably have a sense or feel of what we're a bit like and what we're aiming to build out to be more like. So we do have a formal partnership with them. Michigan Business Connection, they're a business lending QSO out of Michigan, servicing about 26 credit unions. We're going live at the moment with a platform participation model, which is going to allow that QSO to invite smaller credit unions to do small business digital lending through that platform. So as opposed to a larger credit union having their own instance of the Ranqx platform, this is going to enable us to get to the smaller ones as well. So that's exciting to have them as a first customer. Circle Fund have invested, and we're on the Circle Spring Accelerator currently. So I've just spent a week in Michigan with MSU FCU. Now, MSU FCU have just invested a significant equity investment in us, and we're also going to be going live to drive their small business loan book and small business deposit growth for the year ahead. So very, very excited about that partnership. I'll share a little bit more on the next slide. We're a Cunis Strategic Services client, or I should say partner, and consequently we're working with a number of the leagues, and excited to be working with CCUA and with Melissa and Bryce and David and Dean and the team. We've got some really exciting plans for the year ahead for different events and things. So it's great to be talking to you about this, but I just thought I'll share a little bit about our background. We are very US centric now. Yes, my family and I still live in New Zealand, but I think I'm up here 7 weeks out of the next 11. And we're hiring a US sales team here as well. So we are raising capital. I'm putting this out there because via CCUA we said we would make it known to the CCUA credit unions that a capital investment is available if any credit unions are looking to invest. MSU have just invested 1.5 million, and we're now going to be part of the Reseda group nationwide there with them as well. Basically, we're still raising. We're going to add another 1 to 2 million under a safe note structure. So we'll consider investments for any interested credit unions to between $250 up to $1 million on the same terms as MSU FCU. So Melissa and I will share more about that probably in the months ahead with some credit unions, but just thought we'd let you know that as well as we go forward. In terms of sort of taking a step back and looking at the US market, and if we think about the traditional or the typical small business, they're often a sole proprietor or a mum and pop type operator. They're looking at their cash flows monthly, weekly, even daily, depending on what's going on. Seasonality, weather conditions, tax time, needing inventory, growth. We want a new project. We need some more. How do we fund this? Lots of dynamic things go on in all sorts of different industries. And when we look at the traditional credit union solutions for helping those small businesses access capital, you guys are typically saying, hey, give us a call, send us an email, or visit us in branch. And for most small businesses, and particularly the younger generations that are coming through, that's a barrier, and it's something that creates friction for them, and they're fearful that the process, and we had a great discussion around the table yesterday with a number of credit unions, this can be a 5 to 6 to 7 week journey for these small businesses, and they just don't have that time, and they're fearful that it's going to be an elongated and painful process. So they often don't come to us, and we'll share some data on that in a minute. So consequently, globally, there's a massive amount of unmet capital needs for small businesses, in the trillions of dollars. And over half of US small businesses at some point have a loan with some sort of alternative lender. Now that could be mum and dad, it could be, Auntie Mavis who's done well in life. It could be an online fintech, which I want to talk about a bit more. It could be a finance company. it could be a bank, and it's less likely to be a credit union. So we aren't really seriously considered in this space, and I think that's a massive unmet need that the credit unions can grab a hold of at this point in time. And partly where we're losing ground is that the fintechs are offering digital services that are outperforming credit unions on not just technology, but starting to become on image and trust as well. So we've got to steal some ground back on that, and that's what we're looking to do via these partnerships. We've done a bit of work with Visa, and I'd be interested in part of the discussion as we get through this morning to see if you've done any cost evaluation in terms of what it does cost your credit union to obtain, underwrite and monitor a small business loan of 50 to 100K. It wouldn't matter. I mean, these same costs are relatively the same, whether it's a $15,000 loan application or a $150,000 loan application. You sort of throw the same internal time, cost and effort at them. And look, these numbers are somewhat, indicative, but they've come via some research that Visa have done. I've had CFOs at credit unions, Space Coast, in fact, walk up to me when I've come off stage presenting this, and they've said, "You're bang on. We're just north of that $2,000 mark for each loan that we loan application that we process." Now, whether you look at that and say that's a bit higher than what we think it would be, we're working with some credit unions at the moment that are around $1,200, $1,500, $1,700. The point being, if 10 applications come into your credit union this month or this week, that's going to be costing you somewhere between $10,000 and $20,000 plus. And you're only probably approving somewhere around 20-ish% of that is the credit union industry average. You might be slightly higher depending on how your vetting process is before you'd sort of qualify the applications. But the point is that there's a lot of time and effort goes into a decline as well. So we've got a high sunk cost that's hard to recover, and especially when we think about the average loan size being sort of $20,000, $30,000, $40,000, $50,000. So the sort of unit economics aren't quite right for the model to be scalable, and hence why we don't really chase the local community opportunities to win new members and help the community prosperity grow from there. So we'll touch on some of these numbers a bit later on. I'm keen to hear your views on those. And look, when you think about these systemic problems in the small business, sort of working capital space, it's not surprising that someone like Deloitte, who we're looking to partner with at the moment, based off this white paper that we saw this insight from, most traditional banks and credit unions in the US have not developed an online capability that provides a straight-through small business loan application with an instant decision. So when we saw this, we contacted Deloitte and we showed them the KiwiBank solution, and they said, "Wow, when are you guys coming up here?" So look, we know we have some competitors in this space with various LOSs. Some of them really double more so as a sort of a digital workflow for a loan officer to guide a small business through. Most of them rely on document uploads by way of PDFs and things, whereby we're leveraging real-time financial data via APIs. So we're trying to remove all that friction and make sure that we're really tapping into already validated data sets from public and permissioned sources of data. If we look at the lending market in the US, and I encourage you to sort of reflect on your own region where you might be, somewhere here in New England, I'm assuming that you all are. And we look at that graph on the top left-hand side, we can see that credit unions are only sitting at 8% of the consideration set of small businesses who think about applying for a loan. Yet we're exactly the same number, at least by financial institutions, around about 4,700 credit unions as there are banks. So we can see the large and small banks just dominate the mind share. But concerningly for me is it's these online lenders and finance companies that are way more market share than we are. And we've got some significant problems around cost of capital when we start looking at what those solutions are providing. So we know the big banks are hard to work with. We know that their conversion and approval rates are sitting around 12 to 15% at the moment. And when we think pre-pandemic, approval rates for working capital for small businesses were around about 45 to 50%. So, sort of capital's drying up for small businesses, and that's a problem for our communities, and we're not part of the solution yet. If we look at the table at the bottom, we can see that over the last 10 years, credit unions have had significant growth in commercial lending. So this number includes commercial realty, around about 140 billion in 2022, compared to 42 billion back in 2012. But let's compare that to total bank bank commercial lending, and it's, you know, we're 2% of them. And partly when we look at that pie chart at the top, we can see how we compare to banks. It's because any of the commercial lending that we have done has tended to be highly weighted in that dark blue commercial realty. That's what we're comfortable with. Bricks and mortar, you know, something we can go and touch and see, and we can take a lien over and securitize, and that's where credit unions have played. Now, I'm not advocating at all for us to decrease the amount of credit union commercial realty lending. Love to see it grow. And if we think about my parents' example, I think having a great frictionless, highly efficient digital front door for working capital solutions is only going to help the credit union space grow the commercial realty side of lending, because you know, a lot of small businesses don't even need commercial realty today. They're the gig economy, they're working from home. But as they grow prosperity through a successful business, they're likely to look to invest in commercial premises and so on. So I'd like to see that pie sort of balance a bit more like the bank one is. And actually, it was Barb Laumann, who's the chairman of CUNA Strategic Services, when we signed our nationwide partnership with them last August. She said, look, we've partnered with Ranqx because we want to see the credit union movement steal $100 billion of lending off the online lenders and the banks. And I think that's quite a compelling sort of a battle cry, if you will, to sort of say, we're missing an opportunity here. There's no reason why we should not be considered in our local community by local small businesses for a loan of $20, $30, $50, $80, $100,000. We've just not got solutions for them yet. And if we look at the market, there's millions of small businesses, 33 million of them nearly. Most of them are sole traders. And you know, if we look at some of the figures on this page, we can sort of see the types of loan values that are in play, and I'm sure you see them through your shop. If we look at those bullet points on the left from the Fed Reserve, we can see sort of traditional bank loans for commercial can range from sort of the 100 grand SBA loan up to sort of the average $663,000 loan, which is really when we're into the commercial realty sort of side of things. But if we look at that little table on the right, where we look at Bluevine, Credibly, Fundbox, and OnDeck, that's the space that I think is wide open for us. Those lenders just have slick digital value propositions, but what they do have is, you know, a tolerance for what they actually have is a business model that relies on interest rates of north of 25% and up to even 80%. So we're actually talking about predatory lending. And hence there's a bill or bills in place in the Senate that they're working through in terms of how they can reduce the predatory lending that's going on. So, you know, I think the data that I'm trying to share with you here is what we see as the nationwide opportunity, and hopefully you're reflecting on that here in New England as well, that, you know, we just don't have solutions for our local small businesses because it's not efficient. You know, the unit economics don't work. And consequently, we're not considered locally by our small businesses to come and get these $30,000, $40,000, $50,000 loans. Hopefully, in partnership with Ranqx, you can see that can open up that avenue for you. I'll just pause there before I go forward. Any comments from anyone on the call in terms of how I'm framing the problem as we see it? Some of maybe the costs that we've observed in the origination and underwriting space. Some of that data. Any thoughts or comments?
I mean, I would just say, I mean, you know, I think this is for most credit unions. I mean, the need's there, right? It's very obvious. The opportunity is incredibly obvious, and you've hit the nail on the head. It's a cultural thing, right? It's a risk tolerance thing. The timing of it is phenomenal from the standpoint that, you know, when we're all flush with liquidity, I mean, hey, we had to put the money to work, and what better that put it to work than, you know, more secured, collateralized assets, you know, larger loans and all that stuff. Obviously, with the current market dynamics, that's shifted, you know. So now I think even our organization, we've shifted more towards, you know, more diverse portfolio so that we can make sure we're getting those deposit relationships along with the loans. But it's I can speak for St. Mary's, and I'm sure Leominster is the same thing, and every other credit union I talk to. I mean, we're all so comfortable with our minimal level of charge-offs, and, you know, there's the appetite or the desire to be more efficient and provide and be attractive from a marketing standpoint. There's just that fear of unknown risk, you know, that greater volume entails. It's odd because I thought coming in, I've been with the credit union now for, it'll be going on 5 years in May, and I thought coming here we'd have this huge small business portfolio, and we don't. And
Not
seems
yet.
very not yet. Seems very contrary to the mission of credit unions. But again, it's such a huge shift. That to me is the challenge.
Yeah. I couldn't agree more with you, Kyle. I think you framed that very, very well. It is cultural. It's what we're comfortable with. I think we're getting people like yourselves and industry influencers that are starting to sort of talk about the unmet need and the challenge in shifting our appetite and our risk tolerances. And look, having worked with Kiwibank for the 5 years that we have now, their delinquencies haven't increased in this. Their approval rates have gone up. The rules of what's good responsible lending and what's good robust credit policies, they don't go out the door just because you're using digital. And we don't have to auto approve unconditionally. We auto approve conditionally, and it still can be conditional on a loan officer eyeballing the people and doing a bit more background checking. But fundamentally, we can apply the rules of how long has this business been in existence. What's its profit and loss? What's its balance sheet? Let's see their tax returns. Look at their credit scores. Do UCC filings. Do KYB, KYC, and it's as robust as we're just not using people to do that,
Right.
Which frees up more people at your branches to be able to manage these refers and book these new loans and get into more complex thinking like $100,000, $200,000, $500,000 deals. So we're sort of we're missing that trick in that smaller space, which is and I'm happy to talk to the MSU, FCU example. I'm sure they wouldn't mind me sharing this. They have a large alumni around the country. They've got something like 335,000 existing members now, of which 18,000 of those are small businesses. So to your point, Kyle, they've said, we're missing a trick here. We have so many alumni around the country that will be business owners, and they'll be struggling to get credit. And we need to bring them back into the safety of the credit union. So they're going to use Ranqx as the digital front door to say, hey, we've made applying for a loan easy. But the condition, if you are approved for the loan, is that before you can draw that loan down, you must become open a deposit account and become a member of the credit union. So you talked about liquidity. They see that as a key strategy of attracting new deposits and bringing high value members, I should say, back into the credit union movement. So we're really excited about that strategy because we think that's going to be very, very pertinent for the next 2 to 3 years, as the new deposits are going to be fundamental to everyone's strategy. I'll progress now because I want to get you into a bit of a demo, and then I'd love to hear more of your thoughts. Because again, this is a two-way conversation. Yes, I'm introducing what it is that we've got and why we're doing it, but it'll be working with the likes of yourselves as to how we shape this product as we go to market. And we're getting our first couple of customers underway now. But I think it'll be those innovators in each state that sort of say, hey, this is the space we want to lead in, that we want to be known for, that we want to innovate within. So I want to hear your views as well. So this is a two-way dialogue. So look, I'll talk a little bit about our platform, then give you a quick demo. As I say, my vision is to accelerate the flow of capital to small businesses. We have built a digital lending platform. It's got the number 2 beside it because I'll show you a piece that's going to come in front of it soon when we've finished our cap raising and start building out. But basically, the Ranqx Digital Lending Platform is a piece of technology that we've built so that you don't have to. Yes, some of those large banks will attempt to build this themselves. The US banks, the B of A's, the Wells Fargo's and things. And trust me, they've all knocked on my door. They've all wanted to have chats. We're many months into conversations with some of them, and I've started to call them technology tourists. They love something new and shiny, but 18 months later, I'm probably likely to have a slow maybe, as opposed to a quick yes or a quick no. So we're very much we've been polite, but we're very much focused more on that credit union movement, that we want to see that shift for Barb Laumann to steal $100 billion off the fintechs and the banks. So we've orchestrated this so you don't have to. Instead of you spending tens of millions of dollars, which you don't have the resources for, and multiple years to get a product like this stood up, we can get you up and running in 6 to 8 weeks. And there are 3 key components to the platform, and I'm going to demonstrate the first 2 of them today. Firstly, there's our origination module, and basically what we've got is a credit union branded user interface. So we're invisible. No one and none of your members or SMBs would know we exist. So it would be branded St. Mary's Bank Credit Union. Your color palette, your look and feel, your terms and conditions, your fonts, all of that, and driven off your web assets, mobile. We've designed for mobile, tablet, laptop, the whole thing. The small business enters an apply now situation because they like the sound of the value proposition, and through some pretty simple sort of info gathering and some permissioning, we use APIs to credit unions, registries, financial platforms to be able to build a picture of who's applying and how likely are you to get repaid. And we do that in seconds. And what we then do with our second bullet point here is we built our own decision engine. So it's an expert judgment model. We work with your credit teams to build out your own credit box. So it's your balance sheet in play. These are your rules, your policies, and your scorecard. So, we can work with you on the data that we've got and say how, what industries, how many years in business, what debt service ratios would you look at? How would you score that? All those different things that we'll talk about in a few more minutes. That's all baked into a decisioning platform. So you're not having to go and do any manual spreads. The product is doing that itself. And within minutes, it pushes out an answer to the applicant, to the small business, and says, hey, look, you're provisionally approved. Credit union will be in touch forthwith. Or it can say, hey, look, we're going to need a bit more information, and we're pushing a refer into the credit union, and one of your loan officers picks all that data up and then works through the opportunity. Or in a lot of cases, it'll be a decline. Now, that decline can be as jarring as sorry, no, we're not, it's not approved today, good luck. We can also link that applicant through to alternative lenders if that is something that the credit union would like to take the journey on. And that actually leads to a cost recovery as well. So if a loan is booked through that, then an income flow comes back to you as a credit union. But also we're starting to work through MSU, FCU with, and Melissa and I were talking about this yesterday, with various financial wellness solutions that could sit on the back of our platform when there is a decline, to be able to sort of guide and coach a small business to being able to be more lendable in the weeks, months ahead. So there's various elements that approve, refer, and decline can be managed with here. But the key components are really this digitized origination and digitized underwriting. Now, when a small business applicant is a cloud accounting data user, such as QuickBooks Online, of which there's about 9 million small businesses in the US that do use, we have the ability to retain that token at the small business's permission. And that enables us to basically covenant the loan for the period of loan. So we're monitoring things like, revenue growth, gross margin, performance, assets, all of that. So that can work for two reasons. It can be a great way to, you to support them if their growth is continuing. It can also be a way for you to be able to assist them if the business is looking like it's, maybe having a turn for the worst. So, we're seeing use cases for this in the UK for particularly invoice financing, where we're seeing large FIs offer, hey, you connect your data, and as long as that data stays connected and you meet our criteria, we'll keep the facility open for you. So this is the way data sharing with trusted financial entities is moving towards. And I see us helping credit unions move from being not in the consideration set and at best reactive into being truly proactive funding partners of small business. And I think that's an exciting, 10, 15-year journey that we all have in front of us. So, so I'm not going to demonstrate the monitoring side, but it basically that sort of harks back to my old data insights benchmarking play that we had in 2015. That was bread and butter for us. So it's sort of allowing the insights to surface back into the use case. I mentioned QCash Financial. You may or may not be customers of them, but they're in about 130 credit unions now around the US, and they've basically made it really frictionless for a member to get a small dollar loan virtually instantly. So we're trying to adhere to those same sort of, I suppose, platform opportunities that QCash have built out. We're entirely in the cloud, so we are AWS hosted. So what would happen here on the West Coast is we would be hosted somewhere near here. So all the data stays sovereign in the US. We would host somewhere, New York. I'm not sure where the nearest data center for AWS is, but then we'd back up probably in the Southeast, California or something like that. So everything we do, we ideally look for leveraging APIs more than sort of OCR or PDF upload, etc. We're trying to leverage real data flows. And we can deliver this product entirely from anywhere in the world. My team's in New Zealand, so we're entirely SaaS delivery. We don't need to come and plug anything into the credit union. It's the magic of this thing called the interwebs. So it's working pretty well. I'm going to get into a demo, but I would encourage you, and I'm happy to send a link to Kiwi Bank Fast Capital. If you have a look at how that's positioned on their web pages, they're offering overdraft, term loans, and business credit cards. And the type of activity that we're encouraging lenders to think of here is really that sort of, probably not as low as 5,000, but it can be, from probably 10, 15,000 through to up to 500,000. Kiwi Bank allow people to apply up to $1 million on this platform. Everything over 100K becomes an auto refer if it's looking good. But they're auto approving anything under 100K at the moment. So this is a really efficient way and a frictionless way to really grow those smaller loans, which for you probably look like 20 to 50K, I'm guessing. Now,
Hey, Dave, sorry, I hate to cut you off. I gotta head to a noontime lunch here. Are you gonna be at Accelerate?
Accelerate? No. When is that?
May-ish time period.
No, I think that is the month I'm back in New Zealand.
Okay.
But if you have you got 3 more minutes, because you'll actually see the product. I
do. 11:45. I gotta hit the road here.
Okay, cool. Because I'll move on. So this is a demo, and look, I'm happy for you to take these. Melissa can make sure that you get these slides, Kyle, but I'd love to continue the conversation with you. But so this is a fictitious credit union, Biz Credit Union. They've got the value proposition up that this is a frictionless way for you to apply for capital. You're going to need to share this type of data with us. You're going to need to permission us to do some credit checks, etc. on you. It's only going to take a matter of minutes. If you like the look of it, apply now. Now, there's a fictitious little company called Giraffe Early Learning Center. It's a daycare. One of the directors there, Stephen, he's looking for $125,000 working capital. He sees the value proposition, so he likes it. What he'll do is he'll click the Apply Now button, and you'll see there's limited keyed-in data because we're leveraging the APIs to figure out who he is. In particular, there's a little missing piece you're not going to see here, but we leverage what his EIN number is to be able to find out all the information about him whilst we do some personal checks as well. So our vision was, let's get out of the way of the customer or the member, and that's what I think we've managed to do. So he clicks Apply Now. So this is the user experience as they would have at your credit union. This is our platform, but it looks like your color palette and brand and everything. He checks some boxes that he's, an officer of the company. He's permissible to go and apply for a loan. He's in the state of whatever it might be. He'll enter his EIN number. We'll identify that that's his company. We'll bring through the director's data, and we'll know that there's 2 directors for this company. In the background, we're bringing through data like registered address, year of incorporation, other shareholders, phone numbers. All that data is stuff that we're collecting off APIs, eliminates keystroke mistakes, and actually populates the data set that you would require in your payload of data. We asked Stephen to validate and verify who he is, so we can do things like synthetic fraud checks on his email addresses, so that we're aware that this is an email that's been around for 4 or 5 years as opposed to 4 or 5 minutes from some other part of the planet. And this enables us to be able to validate and verify that he's a real person. We're going to bring through photo ID and visual ID checks here as well. He clicks the box that he wants the credit union to be able to do credit checks on him. We do personal and business. Tells us how much he's wanting and for what. This is all customizable. We can ask whatever questions we want here. How much have shareholders invested? How much unsecured credit does he have access to? Then we get him to connect his financial data. Now we can do up to 18 different financial platforms in the US, including bank statement data, and we are currently integrating to the IRS tax transcripts. He happens to be a Xero user. It's OAuth 2 process, so highly secure. You don't get any passwords. We tokenize it all. So basically, he's permissioning your credit union via us to do a handshake so that we can build 24 months worth of his P&L and balance sheet. He doesn't have to go to his bookkeeper and his accountant to get all that prepped, as long as his accounts are up to date. And we can build, as I say, as long as it's taking me to talk here now, 24 months with a P&L and balance sheet. That's him. That's his application done. We've now collected 1,200 data points on him, and we've put that through our underwriting engine, and we've sent him an email saying you're provisionally approved or declined. And that pallet of data can then come into your credit union, and your loan officers can then pick that up and then move towards, credit memos, etc. We can do adverse letters. We can do whatever is required off the back end of that. With the investment we've got coming, we're planning to build out the ability for us to digitize the documentation and book to core. We're not there yet, so this does require our data set to go via our API into your existing LOS system. And as I say, 1,200 data points, including these 22 calculations that we've automatically done, as opposed to you having to do manually, meaning that your chief credit officers would look at these and say, boy, we only use 3 or 4 of these, but we do all 22 of them. And I'm just conscious of your time. You've got 1 minute left, Kyle. So again, this is all digitally done. It's all on the payload of data for you. You haven't had to go and work all these things out. And the IRS tax transcripts and tax returns are available there as well, which we're not auto decisioning off yet, but we're working towards that. To get you up and running, the day one data set would be these 10. Business credit, personal credit. You don't have to take COIB and KYC through us or synthetic fraud, but P&L, balance sheet, all those 22 accounting analytics that I just showed you, those calculations, all the decisioning analytics, including the decline reasons, and then the application metadata, the phone numbers, the addresses, and everything. That's all digitally delivered to you, plus the IRS tax transcripts if that's what you want. Now, off that same user interface that I just showed you, you can also get these other 10 sets of data as well. Business matching, person matching, business search, liens, judgments. We're going live in Michigan with a customer who's going to use the UCC filings on day one. So all of those data sets are available if you want to utilize them within an instance, if that's what you want to get up and running with. So at least now you've seen a demo, Kyle. I'd love to explore more with you in terms of helping build a business case for what's going on, at your credit union. But respect the fact that you've
No worries. Yeah, send me the information, and we can do a follow-up subsequently.
Awesome.
All right. Thank you.
Appreciate your time. Thank you,
All right.
Kyle.
All right, bye.
So look, I'll pause there. I know that I should stop sharing screen. I know that Michael, you're still here. Any comments or thoughts from you at this point in time?
Not for me. That was really good. I mean, I saw it yesterday, but yeah, the software is impressive.
Yeah, thanks, David.
Yeah.
Getting to cultural and I think if your software can, it seems like it definitely can, is save a significant amount of time for our credit analyst to kind of compile everything quickly. Like I don't think I would ever, or Leominster Credit Union or myself would be fully comfortable with an automated decision making and just say, yep, we're gonna, the automated decision says, yep, go forward. We just move forward based on that. Meaning I would have to, thoroughly review everything, and make sure it is a go, or a nay, or a decline. So that's just something culturally would just take, for just to let the software system say 100% absolutely no and 100% absolutely yes, move forward. That's something I'd have a tough time with without digesting everything and spending at least, I don't know, 15 to 45 minutes reviewing everything and asking questions to the borrower. And, that's just so.
Mike, one of the things that I was talking about yesterday, having been self-employed, I've owned a few companies, as a few small companies, and it's always seems to be the intersection of accounts receivable and payroll where you need cash flow. Those three, as a small company, that's where the three things, and everybody kind of plans this out until you get punched in the face and you don't know what to do. And then that's where your planning has to be changed around a little bit. One of the things I found yesterday is that this fills that 15 to 30 day niche mark. Like there were times where we were selling off loans, for example, and our investor pushed things out, so it affected my cash flow in the mortgage world. And so I had a gap there of like 30 days or 18 days that I needed 40 grand for this payroll, whatever the issue is. And to me, I was fortunate because I could just walk down the street. I live in a small town. I handshake the loan with the commercial lender, and they just write a check. But the opportunity to know that in the consumer world, one, like car loans are automated, up to a certain amount, like 30,000. There's instant approvals on that. There's instant approvals on the home equity loans nowadays. If it's that tranche of loans that are like 50,000 or less or 40,000 or less, like you said, it is a cultural thing, right? That from a business owner, I used to be surprised to say, in order for me, there were times where I would skip the bank, my community bank, and just go right to my lines of credit. And I'm like, it's too much. All I need is 38,000, I'll have it. My accounts will be paid, boom, boom, boom. So it is definitely a cultural thing, but I think, and that's one of the things I love Dave's software, having experienced that in my life a lot, is interesting. You set that limits, right? This isn't 200 grand or 100 grand. There's a market in there for that cash flow mix. That's just my opinion.
Gotcha. Yeah, like there was an example where a small business, was doing okay. And, I said, hey, I need a PFS, I need personal tax returns, I need business tax returns. I need to do a global cash flow, I need all this and this. And he says, no, I'll just go on to Discover.
Yeah, I mean, I've been through that in my life in the past. I mean, because here's the other thing is again, it's all about the loan, the risk and return, right? So how much risk are you willing to put into a $40,000 small business, which has always surprised me that same risk is eliminated when you're talking about automation on car loans that are 80,000, right? Or home equity loans. There's a lot of credit unions right now that's 7-minute approval with point of sale. And I'm like, how can you approve somebody in 7 minutes for, $260,000, but small business needs 40,000. You got to bring all that in. And then on top of that, it could be a week before the decision's made. In some cases, like you have a really personal relationship, you handshake, you get the money, but as a small business, when those glitches happen, you need cash like tomorrow, right? And then it's like another process to wait to that small business point. Yeah, you just end up, you have lines of credit available in other spots, but then, you have to bring in personal funds and that sort of stuff where I don't know, but yeah.
Mike, just wondering, Michael, have you you obviously do an amount of small business lending of this type of nature currently? Do you currently have a book for that?
Yeah, we have, let's see, at least, I'm fairly new to Leominster Credit Union, and we have a small book, and I'm charged with, slowly growing it over time.
Right.
But most of our loans are, I would say, under 300 grand, under 200 grand.
Yeah.
So we have a lot of small customers, some big ones, but mainly the majority of our loans are 300,000. Now, I'm bringing in 5 million, 6 million, 3 million, 2 million loans to help diversify and the whole portfolio. But a lot of our loans, say through a branch network, we'll get a call for, say, a $60,000 dump truck, or and it would just be nice to do that more efficiently.
Yeah, so that was going to be my question on that, Carl, because Michael, sorry, because your $300,000 plus loans are valuable to you, and you need some good robust thinking on that. And I think to David's point that he was making before, we know that there's the blue vines and the credibleys and things are just picking up those 30, 50, $60,000 loans. And I'm guessing your processes are the same for those smaller loans, that $60,000 dump truck, as it is for the $300,000 loan. I'm guessing.
Yep.
Yeah. And that's where the scalability just goes right out the window, right? Because you want to be freeing up your team or yourself and your team to be doing more of the 300,000 to the 5 million ones. But you should be looking to be able to meet the local community's needs for those, $20,000 to $70,000 loans. And,
It
in
helps
terms of
with liquidity too, to get those deposits and everything.
this is the
I'd ask
MSUFCU
that
strategy. You're bang on, Mike. That is exactly MSUFC's strategy. It's like, and you touched on it before. Ranqx can do whatever rules you want. We might never have an auto approve. It might be provisionally approved, T's and C's apply. And, one of your people would still look at it and go, okay, I can see the tax returns. I can see 24 months worth of P&L balance sheet. I've got a personal credit score and a business credit score here. It's 25 grand. Go, money's out the door, as David said, move on. And that's the real, we're not trying to subjugate or take over here, the belts and braces approaches that should be applied to those larger value loans. And we're certainly not wanting to take the credit union movement into subprime lending. Kiwi Bank certainly haven't done that. They've just gone from saying we didn't have an efficient way to do any of these kinds of loans, and we've gone from doing 1 or 2 a week to now doing 100 a week. Wow, they're winning. Small businesses winning. And the big banks haven't done it. So I just I think it is a cultural mind shift change. I'm not expecting it to happen today, and that's why we're having these kind of conversations. But I think to your points and Kyle's points, the opportunity's there, and there will be a move to this, and we've already got some customers moving. So, how many branches do you have as a matter of interest, Michael?
Just 8. We're small. We're a 900 million.
Yep, perfect. But
With
with those 8 branches, I mean, effectively, we're going to explore with MSUFCU via their branch network as well, because they're keen for this to be a multi-channel approach, is that if a small business does walk into a branch, is that any of those loan officers should be comfortable basically using an in-branch tablet or their own, terminal at the desk and just turning the screen around saying, hey, Bob the builder, look, why don't you apply here? It's going to take you 3 minutes. And, I can talk to you as we're doing that. And that it takes the pressure off the in-branch people who don't have to say, oh, I'm not a small business lending expert. I don't know how to do this. It's like, hey, we've got this process. Have a look at it. If you're comfortable doing it, we can do it and see what it throws up. So they've walked out of the branch 3 or 5 minutes later with a handheld, soft decline, or hey, this is looking good. Well, now one of our commercial team will be in touch sometime later today. So it just opens up that whole other channel for you. So yeah, we'd certainly be keen to explore more if you want to. What do you think the average size loan would be that you'd be booking, Michael, for in the small business side?
It's a good question. Probably around 100 grand.
Okay.
75 grand.
And have you
in that realm? Yeah.
Yeah. And have you done any internal sort of I suppose cost analysis of what it does take to get from
we have
find out a yes or no? And I look at this roughly the same time between, it's the same amount of time to get to a no as it is to a yes, roughly. You haven't done that.
No.
Did those numbers, when I threw
this is our first embarkment on looking into first embarkment. So
okay.
I'm a greenhorn.
Cool. Well, look, it'd be fun to sort of work that through with you. If you sort of think that this might be something that you're interested in exploring, it'd be fun even just to work through. In fact, there's a slide. I'll share my screen just quickly because if there's any further questions, I'm happy to field those from you.
Sure.
But this business case, I mean, effectively, these questions that I'm about to show you here, these are the things that essentially, this is the slide 15 that you'll see on the deck that Melissa will send through. These are the things that you basically want to work through. How many small medium businesses do you think there are in the region? How many existing ones are members? And do we know what that split looks like between sole traders and slightly larger ones? So that's just some good local market analytics. Then how many loan applications are we currently processing each week per month? And then what's our average size of those applications. You've mentioned 100, and what percentage are we approving? So when we've done that analysis, we've got a pretty robust sort of a view of, you know, what the opportunity is for a product like ours, you know, our install cost and our per annual licensing and things versus what your current costs are. If one of the accountants can help us through just sort of, you know, putting some dollars and cents to what it takes to go from apply now to decision. And then that bottom bullet point's the key one. And I'm sure that the executives at your credit union will be looking at things like, you know, those deposits and attracting new members. So what do we want our small business loan book on our deposits to look like, and by when? So building a business case really looks at those 6 points. And, you know, as I say, happy for you to, have access to these slides and, you know, even challenge yourself to think those through. And if you wanted to reach out, we'd be more than happy to try and work through those with you.
Yeah, that'd be great.
Cool.
Just got that. Just need time. That's all.
Yeah.
Yeah.
Like I was talking with a credit union yesterday, and he's on this journey, and he said to me, "Look, Rome was not built in a day, Dave. Take time." And the cool thing about this movement, Michael, and working with the likes of CCUA is, you know, there's thousands of credit unions. We're not looking for thousands to sign up today. We're looking for the first 15 or 20 that want to, you know, lead in the space, and then others will follow, and we'll all learn from each other. So don't worry, there's no hard sell on this. This is, you know, we're here, we're in market, we're going to be here this year, next year, the following year. So when the timing's right, we can, you know, explore more.
Yep. Perfect.
Cool.
If you could send me your deck, that presentation, that would be great.
Happy to, more than happy to, and happy to field any questions. Whereabouts are you based out of, Michael?
Leominster, Mass. So northwest of Boston.
So north of Boston, northwest of Boston, where I am now. Okay, cool. That's awesome. Well, look, I'm happy to field any questions at any time. CCUA team, are there any sort of further things you'd like us to cover off at this point? I hope you don't have to go outside and shovel snow, Michael, but it's certainly piling up outside me now.
Yeah, I haven't looked outside since we joined, but it wasn't snowing in New Hampshire. I'm in Merrimack, New Hampshire, right over the border.
Right.
But Leominster, all the branches are closed today.
Yeah, and a lot of schools pre-closed as well, I hear, around the places.
Yeah, not in New Hampshire. Well, my wife's a teacher, and I have 2 little kids, and they're all in school. So good to have the house by myself. So I think, I mean, next steps for me would be to, you know, review your presentation again, check out your website some more, create a list of questions for you,
right?
And for me to have enough knowledge of your product and the software to have a sit down with the senior lender, my boss.
Sure.
And then we can go from there.
And look, I'm more than happy. Yeah, this is my life, Michael. This is what I do. So I'm more than happy to do the same. You know, we can do it remotely. We can do it when I'm next up here. We can do it in New Zealand. I'm actually going to be in New Hampshire in June, aren't I, Melissa? So you know, happy to actually walk through exactly what you've gone through if post you reviewing things and asking some questions you feel there's value in engaging other colleagues of yours. So that offer is always open. So don't hesitate on that. But we'll get the slide deck to you. I'd love to pick up the conversation and yeah, answer any questions you've got.
Sounds good.
Cool.
Well, thank you for your time. This was great.
Appreciate it.
Well,
Thanks for joining.
Yep. Take care.
bye, everyone.
All right.
Thank
Thank you.
you.
Thank you.